Assalamu alaikum everyone, welcome back to another video. I hope you're having a great day. In today's video we are looking at my portfolio. It's that time again where we look at the portfolio, go through everything I've done in this month. So the buys, the sales, the anything else. We're going to talk about the property as well, everything that we have done this month. So I'll share that with you guys, inshallah. Like I've always said to you, I've started this channel just to kind of share my journey, to help others hopefully out there. This is not financial advice. It's just to make sure that at least to be honest with you, one of the reasons I started was to help others, but it's actually helping me, right? And the reason I say that is because I'm documenting my journey. Sometimes I look back some of these videos. I'm like, oh yeah, in April of 2021, I was here. Right now I'm here. So it kind of really helps me to see where I was, where I'm going and so on, and how actually the portfolio has changed a lot from when I started up until now. So it's really good, and that's one of the reasons I'm actually quite excited to carry on with this thing. I would like this to at least to get somewhere, hopefully in the next couple of years. I'm talking about the portfolio, so hopefully if I can get it into, like, I don't know, £100,000 in the next couple of years, that would be really amazing, because so far within 3 years, okay, less than 3 years, is actually basically halfway through there. So another maybe a year or two, it might be 100 grand. I don't know. We'll see, inshallah, see what happens. Okay. Like I said, I started this channel just to share my journey. And one of the things that I'm actually don't do really is to kind of promote this channel and so on. Oh, by the way, talking about that, can you like the video, please? Okay. I always forget this, right? I forget the subscribe to the channel, all of that stuff, and then I remember one of the videos, I'm like, oh, maybe I should tell people just to start subscribing, because we have a lot more people that are not basically watching these videos that are not subscribed to the channel. So please subscribe to the channel if you haven't already. If you like the transparency, if you like what we're doing here. If you don't like it, then that's absolutely fine. Genuinely, honestly, no hard feelings. If you don't like any of these things, then I'm sure there's a billion other people out there that probably have a better quality products out there, okay, or content if you like. But yeah, if you're liking what we're doing here and you enjoy the videos, please just subscribe to the channel, and obviously, yeah, stay with us. And one of the things that I've basically mentioned to a friend of mine, spoke to me about 3-4 weeks ago, and he's like, oh, how's it going? And I was like, yeah, it's okay, it's going. I don't like really talking about this. I just do it and then fine, and just share my journey, and that's all I'm doing. And he's like, okay, let me find it. And he was trying to find it, but he couldn't. I was like, okay. So he was like, what was in the name again? And then he was like, listen, you might need to think about changing your name. And then one of the brothers in the community actually said it a couple of days ago, it might be easier for people to find you if you were to change the channel to something along the lines of what you're trying to do, which is basically trying to invest in the stock market, the halal way, the Sharia compliant side of things, okay? And that's why I came up with this, and I thought, you know what, let me put the names out there and just see what people think. So far, it looks like the Halal Investor. I'm going to leave this for a couple of more days. I would absolutely appreciate if you could, if you're watching this video and you haven't actually voted yet, go ahead and vote it. So far, we've got about 37 people voting, and it looks like the Halal Investor will be the one, but let's keep voting, inshallah, the next couple of days. So that's that one there. So let's go back here. We're talking about this basically generally my portfolio, okay? And one of the other things that I don't talk about a lot is the fact that recently, and I shared this with you guys, we bought a property, okay? We live in the UK, we live in London, but obviously we bought one in Leicester. That was 1-bedroom apartment. If you haven't seen that video, go and watch it. I've talked about exactly how much it cost me to actually get that property. It was cash. We bought in cash, which some people will say is dumb, but alhamdulillah, I just wanted to do that, and it was done. So let's go over the income, right? So we bought it in, I think we got the keys in March. In April was the first time we got actually the income. Every month we got £448.80. All right, so that's our rental income after we pay for the management fee. So we got a company looking after the property and so on. Okay, so in April, that's what we got. And in April, the total amount we made, the total income for that month was just over £500. The following month was again the same thing. There was no repairs needed. So again, we got the same amount. And then the total income for that month was again just over £500, which was really nice in May. In June, we did exactly the same thing. No repairs again. It was the same rental income. and then we got a little bit more dividend than we paid. Now, some of these dividend, I just realized when I was preparing for today's video, actually includes about 3 or 4 stocks that paid me in July. So because I did it, that video was actually out midway through July, I think. So I included, so this includes about say £40 of worth of dividends that was supposed to be in part of the July whatever, right? So that's basically what it is. But it doesn't matter. In the end of the day, that's income is in my pocket, right? So that month we made about 600. Let's call it just 600. Just for the sake of it, okay? So again, it's increasing, it's heading in the right directions, which is really nice, right? July here, so we got the same income, rental again, everything. I put a question mark on repairs because the company that worked for us, the maintenance company basically, the management company, said they've done a report recently and they found out there are a couple of things that might be need fixing. Nothing huge, so they're now trying to get a quote. So we literally exchanging emails in the last 24 hours. So I'm waiting for them to send someone to the apartment to have a look at it and then let me know how much it will cost. So we'll see what happens. So this might not be the real figures. So that's why I put question mark. Like I always said to you, I'm going to try to be transparent because there will be some months, okay, when you don't make that much money, okay? So that is that one there. And then overall total for this month in terms of dividends was only £22. But like I said, some of the, almost £30 of June's money was actually supposed to be in July, or £40, whatever it was. But overall, right now, £471 of passive income. And this is one of the things, one of the reasons I've actually started this journey, because I want to be able to live off, hopefully one day, basically this passive income. And I'm not just saying just for this property, I'm going to try to get a couple of more properties. That's the long-term plan, inshallah. So if I can get 2 more, that gives me around £500 each. That will be 1,500 from just the properties. And if I can make another 1,000 or whatever, 600, 500 from the dividend portfolio, then hopefully that can get at least to £2,000 a month for us a passive income. And that will change my life, okay? Because obviously £2,000 of passive income, that's a lot of money. Genuinely, that's a lot of money, okay? I'm not going to even lie to you, right? So we'll see how it goes. That's basically from the property side of it. Let's now have a look at, like I've said, guys, this took, like, I'm 35, right? And I've got 2 children. Basically, my wife and I both work and we save everything. We're frugal about things. But I'm doing that now to make sure I put something in place. So at least when I'm 50, 55, 60, I can just live off with it, basically, on what we're doing right now. And that's why I'm investing heavy on this portfolio. Okay, we have this portfolio, and by the way, the money that comes from the rental income, okay, so this money every single month, I basically straight away I put it into interactive brokers. There's an ISA account for the family, and I want to keep that one private, okay? And I've said that before, and I'm going to say it again. I want to keep that one private. So far there's 4 stocks in there. There's about just over £2,000 because some of the stocks that we bought there actually went up quite a bit. And right now that portfolio is up nicely, I think about 2-3%. So every single month I'm gonna add this money into that account and then see what happens to it. Because remember, what I'm trying to do is not just spend that money, I'm reinvesting. So we're buying more stocks in there, and my wife and I will be adding more money to that account as well. So we try to grow that account as well as growing this one, as well as growing our portfolio of hopefully properties. So that's the long term. That's what we're doing, inshallah, and I hope you're enjoying this kind of thing. Right, let's now look at the portfolio. Okay, so one of the things I want to quickly show you is just the breakdown of the portfolio, and then I will give you individual stocks. Okay, so as you can see here, the asset allocation, we've got different things going on here, right? So in this section, what you'll see, the benchmark, which is I think the S&P 500, and then you've got the weight right now for my portfolio. So my portfolio right now, as you can see, is US equities 93%, and then the non-US equities is just about 7%, right? And the benchmark is about 12%, and then 45% is the US equities. What I'm going to do is in the next few months, I'm going to rebalance my portfolio. What that means is I'm going to reduce the US equities, and I'm going to buy more UK and European and other countries based stocks. The reason I want to do that is, what if something happens to the US and then I lose everything? I don't want that. Okay, what I want to do is make sure I have a balanced portfolio that just basically and reduce the risk of just relying on one country. Okay, so I will be focusing more on that, trying to rebalance it and add more stocks from other countries, and that's right now what I'm doing, the research I'm doing. Now I'm off, I'm on holiday right now for another couple of days, so I will be doing a lot more research to finding stocks out there, or maybe it might even just be the stocks that I already own, like the Unilevers and so on, the UK based stocks, the ASML and the companies like that. So I might buy more of those companies and reduce the risk of relying just the US stocks. Okay, so that's the first thing I'm going to do. The next thing we will need to look at is the sector exposure. Okay, and this bit here is really important, and this is something that I really need to work on right now. So the weight again for cyclicals, so companies like in the materials, so like we're talking about companies like Rio Tinto, Air Product and Chemicals, we're talking about PPGs, we're talking about here consumer cyclicals, and that includes the Lowe's, Home Depot, and financials. We're talking about SPGI, and we're talking about, and that's S&P and Global, and we're talking about real estate company like Seagrows and companies like PSA or Public Service, and all of these companies, right? Okay, are already in my portfolio. So if you usually, there you go, Public Storage is in there, Rio Tintos and so on. So what I want to do is quickly show you how this is broken down. 25% of my portfolio, let's call it 26%, is actually cyclicals, and then the benchmark's about 32. So I'm below the benchmark, so I'm happy with that. There's not a lot of problems there, right? Materials about 8%, the benchmark is about 3%, consumer cyclicals 10%. I've got about they have 11% in the benchmark, and I've got about 10%, so it's up. That's fine. Financials about 5%, in the S&P 500 is actually 14%, and then real estate is about 2%. They have about almost 4%. So I'm okay with that. Now the sensitive, okay, is these companies like technology, industrials, and energy and communications. I don't own any communications, so the sensitive is actually 45%, and is 40% on the S&P 500. So more or less the same, right? I don't own any communications. This includes basically companies like TNT, Verizon's, Google, Facebook, and companies like that. A lot of them either have too much debt, or they deal with a lot of entertainment side of things, which I'm not comfortable. So I left that out until I find a company that's Sharia compliant and actually good enough and undervalued. Then I'm not going to add that. Okay, so that's 7% of the benchmark. And then you've got energy. I don't own energy right now, but that's definitely going to change. The S&P 500 is right now about 4%, 4.7%, but I think that's going to go down sooner or later, because energy will come down at some point, and I want to own energy to make sure I have a balanced portfolio, number one, and number two, I want that dividends. I will be honest with you, yeah. I don't mind, having that dividends will be absolutely good. So some of these companies, they pay nice dividend, and some of them, to be honest with you, they increase that dividend and it's actually well covered, so it's absolutely fine. Okay, then I've got industrials. I'm crazy about the industrials because 17%, look at that, and then 10% is the overall. I'm not going to sell them. I like those companies like UPS, companies like Cummins and 3M. What else have I got? Who else is in the, Union Pacific. All of these companies are part of the industrials. Then you've got technology. 28% is my weight right now, and then 21% is the benchmark. So it's not that much of a difference, but I'm gonna try to reduce this technology side of things, and then hopefully take that money and buy more UK based stocks. So that's one of the rebalancing the ideas that I've got right now. I am more overweight in technology, definitely, in comparison to all the other sectors, okay? The closest one, I think, is industrials, and then healthcare is the next one, which we'll look at in a second. So I'm going to try to trim some of the technology stocks, the ones that are very much high up right now, and then take that money and put it into more consumer defensive, healthcare, not even healthcare, and maybe some of the energies and real estate and so on. So I'm going to try to rebalance it, or maybe mainly though UK based companies. That's the target. I want more UK based companies or Europeans and so on. Okay, let's have a look at the defensive. The last one, that's 28%, is 23% the benchmark. Consumer defensive, we're talking about Procter & Gamble, we're talking about Unilever, RB, all of these companies. Healthcare, Right now you can see 17%, but 13% is the overall. Now these two sectors actually, especially healthcare, is what is, it's green right now. Majority of the stocks, and I'll show you in a second, okay, that I own in the healthcare are actually in the green this year, when everything else in the technology is down about 30%. I don't own any utilities because number one, they have very high debt, and number two, they are not, some of them are not Sharia compliant, just simply, okay. They have very high debt, and for that reason I haven't got any companies. If anyone knows any Sharia compliant utility companies that are really good, let me know, okay. There's only a couple of that out there. And as you can see, my stock, basically my portfolio, majority of it is the US based, so that's one of the reasons I want to try to reduce that by more UK based, but more European, okay. If I can find, I'm not going to touch China right now because obviously there's a lot of things going on there that I'm not really comfortable, so we'll see. Right, so now we're going to look at the portfolio and the best performing stocks, and then I'm going to show you a couple of more things and we'll stop the video there. Right, so a year to date, the best performing stock for me is Merck, okay, that's up 16%. Then is Amgen, then is Johnson and J&J. Right, you can see three of these companies are in the healthcare. Then is Cummins, which has actually come back in and now in the positive. Then is Rio Tinto, is only down 4%, and then it goes down from there. And as you can see, the lower you go, the more you will see companies that are either consumer cyclicals, like the consumer defensive, like FV corporations, or you will see companies like the technology companies, Salesforce, Adobe's, and so on. Okay, so the companies that are down a lot are companies who have products right now that are not necessities. Okay, so healthcare is really important to all of us. For that reason, it's actually quite high up. Colgate is exactly another one. I think, yeah, there you go, Unilever, you got RB there, you got all the companies that are on the top are companies who sell products that are really very much well needed, apart from Cummins obviously and Rio Tinto, but majority of them are really good companies that are, what I'm trying to say basically is healthcare everyone needs, whether we're in recession or not, people will buy those products, okay. And that's one of the reasons why people move their money from these companies, okay, into these companies, because they realize, do you know what, I need to own more healthcare because that's something people will need regardless whether we're in a recession, we're in a boom, it doesn't matter. People will still buy these, drugs that they need, okay. Right, and a couple of more things. Like I said before, the final thing I want to show you is the buys and sells for this month. So there's not much of a sales, to be honest with you. I've trimmed KLA just one share just to kind of rebalance things, and Tritex, I just got rid of it completely because it's very similar. So the three companies that I was buying, it was Seagrows, Public Storage, and Tritex. All of them basically are storage basically places, right? So they all have they basically have the big boxes storage places, right? And I don't think that's a good idea to have three companies that sell, that basically that have the same business type. So I thought, you know what, let me focus on public storage, and I will keep Segro as well. And those two, one US, one UK, that will do the job for now. I've bought 7 shares of Unilever, 3 shares of public storage. As you can see, that adds £20 of income, okay, in the long run, which is quite nice, okay. And I think they've also announced a special dividends recently, so I'm hoping that we'll get that as well. Unilever, 7 shares. I bought 7 more shares before it actually went up, so right now I'm actually quite happy, and I'll show you what's happened. RB, I just bought 4 more shares, and then I bought the 2 dividends paying ETFs. I just added that £100, so this time I did 50-50, and as you can see, it added a little bit. So right now it's about almost 40. It added £40 of income, and as you can see here, I'm focusing more UK based, okay, UK based ETF and UK based stuff. So that's what that will be the theme going forward. Right, quick rundown on just the entire portfolio. As you can see, 3M's come back really nicely, so only 6% down. Adobe just 8% down. At one point it was over £500 down. Right now it's only £262. Okay, Air Products and Chemicals is back. Amgen is still going well, and ASML I only own 0.4 shares, so it's still there. Broadcom, another company that I will be adding to, I think, in the next few months. I keep saying that, but then I look at the entire tech sector, and I'm like, okay, I own too much of that, and then I put the money into somewhere else. So right now we'll see. When I do rebalance, I might actually add more to that company. Colgate still up. Cummins has actually come back from almost 5-6% down. Right now it's 7% up, which is quite nice. Home Depot, £333 right now, up 12% up, is nice. So these two were down, I think last time we did a video, but right now they're up 5%, 2%, which is nice. J&J, I haven't touched this company for a long time because I feel like it's overvalued, but I might just buy a little bit here and there, dollar cost average. Okay, like I said, KLA, I sold one share, okay, to take a little bit of profit off the table, but it's up about 19% right now. Lowe's is one of the companies that these two companies actually I'm buying this week, more of these two companies, like I said in yesterday's video. If you haven't seen that video, go and watch it. And then yeah, I'm adding to these two companies. They're not over. So one of the reasons I'm actually adding to this, right, even though it's up because of the FX. Okay, otherwise I would have been down a little bit. Okay, because of FX, I'm actually up a little bit. So right now my price is $190 per share. That's my average price, is actually below that. So that's one of the reasons I'm adding to it, even though I'm up a little bit. Merck has been doing absolutely amazing, but it went down just this month. I think went down a little bit, but last month was actually the best performing, like you've seen already. Microsoft, again, another great company I own right now, is just doing absolutely amazing. I might trim it, I don't know. I love the company, but I don't know, we'll see what happens. It might be one of the companies I trim a little bit just to kind of bring it down, because right now I think it's about 7%. I think it's probably the biggest right now, right? Yeah, there we go, about almost 7% there. And then PPG, another great company I own, is up right now about 3%. Procter & Gamble, 11% up. Public storage just down about 1%, 1.5%. Qualcomm, I'm not touching Qualcomm for a long time. Okay, we'll see what happens to it. If it keeps going up, if it goes above $160 per share, I might trim it and just make a nice run, 20 shares, just sell 2 shares and may take that money and put it into another company. RB, I bought 4 shares recently. I really like this company. It's UK based, so there's no FX craziness going on. Their dividends is actually nice. They have amazing products that are sold in worldwide. So I will be buying more of this company. When I trim some of the stocks in here, I will be adding that money into RB, definitely. Rio Tinto, they literally halved their dividends, but it's still big enough, so I'm gonna keep it. I'm gonna add to it, I guess, in the maybe next couple of weeks. I like the company. I know the issue with Rio Tinto is because if iron ore goes up, it goes up. If it goes down, it goes. So it fluctuates because of the price. And I knew that before I bought this stock. So I'm going to keep it and maybe add to it. We'll see. S&P and Global, I would love to add one more share of this company, but right now it's just too expensive. It's just going up. Salesforce, look at this, 2% down right now, 2.5% is actually coming back. It might be one of the companies, I'll be honest with you, I might trim this, take maybe 5 shares. If it goes in the green and make a little bit of profit, I might sell 5 shares and then rebalance, use that to rebalance my portfolio. I don't know what I'm going to do, but that's what I'm thinking right now. I haven't made the plan yet, so rebalancing is going to take ages, and I'm going to share it with you as I go along. Segro is just up right now about 6%, and we'll be adding to this company. I really like it. Unilever, as you can see, only 3% down. The other day was actually almost 1% down. So my price is actually 41. Let's click again. 41 pounds, right? If it today is actually, if it goes to 41, then I'll break even. I'm not selling this. I would love to add to it. I'm gonna keep it in there, see what happens. Union Pacific, again, another great company, about 19% up. United Parcel Services, or UPS, is actually up almost 10% as well. I would love to buy more on this company, but right now it's just getting too expensive again. VF Corporation is one of my problems right now. I don't know what I'm going to do with this. Cyclical is a great company, but right now I think their debt levels is crazy. So I'm going to keep an eye on it for one more quarter, and then if basic things do not improve, I might take a hit and sell it and then just put that money to work somewhere else, because there's not much of a price appreciation. The dividends is okay, but it's a very much cyclical. It just goes up and down every single day, like 4 or 5%. So I don't like that. It's got very high beta. And then you've got Visa, which is up about 7% nicely right now. I feel I have neglected, but because of the PE is very high right now, and the price is like, my price tag is like right now 217. I should be actually adding to Visa. I might do a little bit more digging and just see if I can add to it. So that's the portfolio, just breakdown of everything in the portfolio. And now that made the video very long, but that literally I've shared, I think, everything today with you guys, so you know what's going on with the property side of things. Okay, you know exactly what's happening in every individual stock. You know what's up, what is down, what I'm doing with. So the long-term plan. Oh, actually, one more thing before I finish. Actually, so this month I'm expecting about $61 of dividends, right? The next month, in September, I'm expecting over $300. I'm hoping that will be the case, right? Because I have to pay about 15% of taxes when I get actually dividends from the US-based companies. But give or take, right, I will get about $300, and that will be really nice. And then the next 2 months is down, then it's up, and then next 2 months down, and then up. So that's normal, and that's what I expect. But overall, by the end of the year, I'm expecting about, you know, $1,500 just in dividends, which will be absolutely amazing, right? And I'm going to continue doing the same thing, dollar cost average, every single month. Share it with you guys if you enjoying and you lasted this long. Okay, let me know, guys. Just one other thing I want to know is, it will be really nice, like if you can start sharing things as well. Just put it on the comment section, like some of the stocks that you own and some of your long term, like for me, like when you look at this portfolio, right, companies like Microsoft, J&J and 3M are like my long term hold. There's no way on earth I'm gonna get rid of them completely. I might do rebalancing, and that's normal, that's healthy, that's portfolio management, right? You have to do these things, but I will not get rid of these companies unless something crazy happens, right? So what is your long-term like hold companies? What is your like companies that you'll say, do you know what, I'm going to hold that company for at least the next 5 years? Just put it on the comment section. Just three stocks that you own that you're going to hold on to for the next at least 5 to 10 years. If they carry on the way they are, nothing crazy happens to the company. I hope you enjoyed the video. Have a wonderful day. Assalamu alaikum.